I want to ask you a question. Do you believe that you can create passive income through the stock market? Are you fairly risk averse with your investments, but still have a good understanding of the stock market and what makes a company stand out in the stock market? Well, you might be a dividend investor, and today I want to talk about specifically the dividend investor. Hey there, my name's James, and I really enjoy the stock market. My journey into the stock market began with my first company's 401k, and my engineering and analytical background, it really helped me understand some of the key principles in the stock market. And with this YouTube channel, I really want to help you become a more responsible and better self-investor. And today we're talking about the dividend investor. And today's video is brought to you by Seeking Alpha. And Seeking Alpha has three main offerings. One of their offerings is their Seeking Alpha premium subscription, and I'm actually a premium subscriber on Seeking Alpha. And Seeking Alpha also has a stock portfolio that they hand pick, and they claim that their stock portfolio outperforms the S&P 500 by about 70 to 80%. And the second offering that Seeking Alpha provides is their Alpha Picks. So this is a portfolio of hand-picked stocks that they have that actually outperforms the S&P 500 over a long period of time. So that's their second offering. And their third offering is they have investing groups, and I think this is very applicable to this group here, or to this video. They have the Dividend Freedom Tribe. It's a paid subscription that you have. The authors are Robert and Sam Kovacs, and they have various articles inside their community that they talk about specific dividend stock. So if you're interested in Seeking Alpha Premium, Seeking Alpha Picks, or the Dividend Freedom Tribe over on Seeking Alpha, go ahead and hit the link in the description. And today I wanted to talk about three key aspects of a dividend investor, and then I want to highlight three dividend ETFs that are the most popular dividend ETFs out there that hold a collection of dividend stocks that are very high performing. So with that, let's get started. So the first key point that I want to talk about the dividend investor is they are very income oriented. So dividend investors, they prioritize generating income through their investments through that dividend yield. They seek stocks that pay a regular dividend as a source of steady cash flow, which can then supplement other forms of income, their full-time job or their part-time job, and then they reinvest those dividends if they don't need those dividends right away. The second thing that dividend investors do is they focus on the dividend yield and dividend growth, and that growth portion is very important. They want to make sure that that dividend is growing and not being stagnant. So these investors typically look for stocks with a history of paying dividends and ideally a track record of increasing their dividend payouts over time. And the third thing a dividend investor likes to do is they have a long-term investment horizon. They're not looking for that stock that is up one day and down the next day. They're looking for a long-term perspective in their dividend investments. They're interested in companies with strong financial health and stability, and they view the dividend payments as a sign of financial strength and management confidence. They tend to favor stocks of established companies with predictable earnings and cash flows. Now I want to talk about the three dividend ETFs that are the most popular dividend ETFs, and then maybe even check out a few of their holdings. So the three ETFs that I want to share today, the first one is going to be ticker symbol VIG, Vanguard's Dividend Appreciation ETF. This ETF has an expense ratio of 0.06. And then the product summary for a dividend ETF like this is very similar for all the dividend ETFs. They seek to track the performance of the US Dividend Growers ETF or index, passively managed in a full replication approach of this Dividend Growers index. The fund remains fully invested. They have large cap equity. They're going for those larger multi-billion dollar, even probably into the trillion-dollar market caps, emphasizing stocks with a record of growing their dividends year over year, and they have a low expense ratio, minimizing their net tracking error. Over on Seeking Alpha's holdings page, you can see that for VIG, they're more weighted toward the technology sector, where Apple, Microsoft, and JP Morgan are around 11% of the entire fund. The second dividend ETF on this list is VYM. This dividend tracks a separate index. It's the High Dividend Yield Index, which measures the investment return of common stocks of companies characterized by high dividend yields. So very similar to VIG. And last but not least, the ever popular SCHD, Schwab's US Dividend Equity ETF. And their fund objective is to track the Dow Jones US Dividend 100 Index. Taking a look at VYM's holding, you can see the technology sector is farther down the list, where they are more heavily weighted in the financials sector. They have JP Morgan as their top holding, then they have Broadcom or AVGO and Exxon Mobil, which is holding around 10% of their portfolio in these top 3 stocks. And then the holdings for SCHD, very similar to VYM. Their holdings are in the 17% in the financials sector, where the top 3 stocks are Home Depot, Cisco, and AbbVie. And that is around 12% of the entire ETF, the top 3 holdings. So that is VIG, VYM, and SCHD. And before we go, I wanted to take a look over on Portfolio Visualizer. If I were to have 100% of VIG in one portfolio, VYM in another, and SCHD in a third, and then how would each of those portfolios, if I had a $10,000 minimum starting balance in each one compared to the Vanguard 500 index, what would that give me 10 years later? Well, if I invested $10,000 10 years ago, 10 years from today, in VIG, I would have $27,000, VYM, I would have $23,000, and SCHD, $26,000. And the S&P 500, I would have $31,000. And this is what it would look like in graph form. So these indexes track themselves very close. However, with the SCHD, VYM, and VIG options, you do have a dividend yield that's going to be higher than the S&P 500 index. The S&P 500 is normally around 1 to 1.5% annually. And real quick, before we finish out, VIG's dividend yield is 1.84%. VYM's dividend yield is 3.0%. And SCHD is sitting at 3.64%. So head down into the comments and let me know if you feel you are a dividend investor. If you don't find yourself more a dividend investing style, if it's not you, I do have a free investing style quiz. Link is in the description. All you do is press File, make a copy, and then copy it to your drive so you can answer these questions, and out will spit based on your risk tolerance and how much you have an understanding of the stock market. It will spit out an investing style from hands-off investor to day trader. So if you don't feel that you are a dividend investor, I do have an investing style quiz that I felt myself, every time I tried to invest in something, I would quickly jump out of it and try to jump into something else because it seemed better at the time, until I finally figured out that I was more of a growth investor than any other style investing. So if you don't think you're a growth investor or a dividend investor, you can download this free quiz. Link is in the description. You don't have to give me your email address, sign up for a website. Simply click the link, then press File, make a copy this over to your Google Drive so then you can answer all of these questions, and then you'll figure out and get a better understanding of what type of investor you are. And if you scroll over here, at the very edge of the spreadsheet, once you determine what type of investor you are, it'll have a few different type of typical investments, and if you were to have an example estimated annual yield as well as an estimated cash to invest, it would give you how much you would receive in 1 year based on this yield and your final balance. And this will have those for the investor that it's applicable for, as well as an explanation of that investor. Let me know what you think. Let me know what type of investor you are. Head down to the comments and let me know. And with that, thanks for watching.